In today's show, Bitcoin repeats rare weekly chart signal that resulted in 50%. Bitcoin price dips as crypto analyst None Your Business shares here. Bitcoin weekly, on 3 occasions, the slope of both the 20 and 50 moving average turned negative. The first two led to 50% plus corrections. And Tordamista responded, I think this chart draws valid parallels. If Bitcoin could not capitulate this time and hold above $35,000, it would be an incredibly bullish sign. My base case scenario, however, given how weak global markets look, is a downward slide in 3 to 6 months, a price recovery, and as on-chain analyst Dylan LeClaire shares, the U.S. dollar currency index approaching multi-decade highs. The U.S. dollar continues to strengthen against foreign fiat currencies, tightening financial conditions. A breaking point for historically over-leveraged economic system is approaching by design. And this just in, breaking news, Fidelity to reportedly allow 401k retirement savings accounts to invest into Bitcoin, which means if approved, retirement savers can allocate 20% of their savings portfolio to Bitcoin without the need to even open a crypto exchange account. Also in today's show, here's how the crypto markets will look in 5 years from now, according to the macro guru, Raoul Pal. Quoting him here from a recent interview, we haven't started where this is going. Every sports team, every massive pop star, every film, every franchise, fashion brands, it's all going this way. So the NFT craze we've got now, cut forward to 3 years' time, we're all going to be talking, whose networks do you own a part of? Oh my God, I've just discovered this pop star. They just had this massive #1 hit single. My token has gone up 300x. That's the world we're going to go to. Also in today's show, breaking news, Elon Musk buys Twitter for $44 billion, and the crypto industry reacts. Check out this meme right here. Elon walking into Twitter HQ tomorrow with his flamethrower, and Elon tweeted, I hope that even my worst critics remain on Twitter, because that is what free speech means. And as you can see, some people are pretty ecstatic. Welcome back, the First Amendment. And Elon also shared, if our Twitter bid succeeds, we will defeat the spam bots or die trying. And Michael Saylor already responded with a solution to that problem. Twitter can solve the problem of scammers and spam bots if they allow real humans to post 50,000 Satoshis worth $20 via Lightning and get verified with an orange check. Then we can limit comments/DMs to verified accounts. Bad actors forfeit their security deposit, and Twitter monetizes malice. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ether, and all the major alts are currently pumping back in the green. But where's the Bitcoin price likely to go next? Find out all this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs, along with a $100,000 Bitcoin price. And if you like getting that crypto, be sure to smash that subscribe button. That's right. And ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And today's episode is brought to you by BlockFi, the #1 leading provider of financial products and services for crypto investors. And right now you can get up to $250 in Bitcoin when you buy crypto or fund your account today with BlockFi. Be sure to use my referral link in the description right down below. Right now there are more than 500,000 people and 350 institutions globally using BlockFi to manage over $10 billion in assets. And here are some of their flagship products, which includes their trading platform where you can buy, sell, and trade the top cryptocurrencies. You can do instant trades with ACH. You can trade 24/7, 365. Another flagship product I love is their BlockFi Bitcoin Rewards Visa credit card, where you can earn an unlimited 1.5% back in Bitcoin on everything you buy. There are no annual fees, no foreign transaction fees, and you can see if you're approved with no impact to your credit score. I also like to point out, for your first 90 days, you're actually going to earn 3.5% Bitcoin back on all your purchases, truly making this a no-brainer. So go ahead and click my referral link in the description right down below to get up to $250 in Bitcoin, and let's start stacking those sats, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Make some noise in the live chat. The Bitcoin is facing a rare chart phenomenon that has historically resulted in 50% price drawdowns. New data shows. In a new tweet on April 25th, popular account None Your Business noted a fresh warning sign from 2 key moving averages on the King Crypto. And for only the 3rd time in its history, Bitcoin's 20-week and 50-week moving averages have both started to slope downwards. And while that may look harmless at a first glance, the result of the first 2 events in late 2014 and late 2018 was Bitcoin losing over 50%. As None Your Business points out here, Bitcoin weekly, on 3 occasions, the slope of both the 20 and 50-week moving average turned negative. The first 2 led to 50% plus corrections. What about this time? What do you think? Let me know in the comments below. Now, both came at similar points in Bitcoin's 4-year halving cycles, and while slightly ahead of time, it has now been nearly as long since the 2018 dip that bottomed out at $3,100. And quoting Tordemeister right here, I think this chart draws valid parallels. If Bitcoin could not capitulate this time and hold above $35,000, it would be an incredibly bullish sign. My base case scenario, however, given how weak global markets look, is a downward slide in 3 to 6 months, a price recovery. And as you can see in this chart, in mid-March, the 20-week moving average crossed under the 50-week moving average. Data from Cointelegraph Markets Pro and TradingView shows in what is commonly known as a death cross. But do keep in mind that despite its name, the phenomenon has not always resulted in significant losses. Now let's discuss dollar strength sparking increasing suspicion. As Cointelegraph recently reported, consensus continues to form over a protracted period of price weakness for Bitcoin, which should come in line with a correction on heavily correlated global stock markets. Now the strength of the US dollar in the face of anti-inflation maneuvers by the Fed is also in focus as a preemptive warning sign for those forecasting a shock event after 2 years of liquidity printing. As on-chain analyst Dylan LeClaire points out here, US dollar currency index approaching multi-decade highs. The US dollar continues to strengthen against foreign fiat currencies, tightening financial conditions. A breaking point for a historically over-leveraged economic system is approaching by design. This is coming at a time when rates are breaking above a multi-decade level trend of lower highs in rates. As credit market volatility hovers around March 2020 crisis level highs, big moves are on the horizon, as he shares here in this chart. And he also goes on to share, Fed will eventually be forced to switch back to easing as the deep global recession will follow any sustained period of monetary tightening, supply chain wreckage from Ukraine conflict, and China lockdowns. With this level of global indebtedness equals sovereign defaults, Bitcoin will fly. Let's freaking go. And I'm going to read you one more tweet from Dylan LeClaire. Fed pivot equals trillions in new debt monetization with real yields as measured by CPI deeply negative across the board. Bonds present asymmetric downside risk while Bitcoin presents asymmetric upside potential, and trillions flood into apolitical, absolutely scarce monetary asset. And before I break down our next breaking story of the day, Fidelity to reportedly allow 401 retirement savings accounts to invest into the king crypto. But first, let's take a quick look at the overall crypto market. As you can see, all the major cryptocurrencies are currently pumping and in the green, with Bitcoin up over 4% for the day, trading at around $40,500. We have Ether up almost 5%, trading back above $3,000. Luna up 7.5%, trading above $95.72, while Solana, Polkadot, Avalanche, Binance Coin, Cardano, and XRP are all pumping and in the green. But all right, now let's break down our next breaking story of the day. The United States-based retirement plan provider Fidelity Investments, that's right, the asset management giant, will reportedly allow 401k retirement savings account holders to directly invest into the king crypto. The new Bitcoin retirement investment plan will go live later this year. It will allow over 23,000 companies associated with Fidelity to administrate their retirement accounts to offer Bitcoin investment options to their customers, reported the Wall Street Journal. And if the proposal to allocate BTC to their savings account gets approval from employers, it will allow retirement savers to allocate up to 20% of their portfolio into Bitcoin. Now, Fidelity is currently in discussions with several of their employers that use its services, and MicroStrategy has reportedly already agreed to the Bitcoin investment plans. Now, the case for retirement savings accounts to invest into Bitcoin is not new. Earlier in June of 2021, another retirement plan provider, For Us All, partnered with Coinbase to offer Bitcoin exposure to its retirement savings account holders. However, Fidelity's interest in this sector would definitely elevate the idea into the mainstream. Now, Dave Gray, head of workplace retirement offerings and platforms at Fidelity Investments, noted that the decision to offer Bitcoin exposure to 401k plan holders was based on high client demand. As he shares here, we started to hear growing interest from plan sponsors organically as to how could Bitcoin or how could digital assets be offered in a retirement plan. We fully expect that cryptocurrency is going to shape the way future generations think about investing for the near and long term. Now, Gray also noted that apart from its initial support for Bitcoin, the company would add other crypto assets to the investment option depending upon the client's demand. And with over $4 trillion worth of assets under management, Fidelity was among the early mainstream financial institutions to dwell into crypto with the launch of its digital asset arm back in 2018. And since then, the investment firm has been one of the biggest advocates for Bitcoin. Let's freaking go. Mass adoption. You ain't seen nothing yet. And before I break down next story of the day, here's how the crypto markets will look 5 years from now, according to the macro guru, Raoul Pal. But first, let's take a quick look at the overall crypto market cap, sitting just under $1.9 trillion with just under 93 billion in volume in the past 24 hours, with the current Bitcoin dominance at 41.3% and the Ether dominance at 19.4%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Dogecoin leading the pack. Go figure. Elon Musk purchases Twitter and Doge pumps literally 28% in one day, now trading just under 16 cents. We have Oasis Network up 17.5%, trading at 23.5 cents, followed by GRT up about 16%, trading at 39 cents. And now checking out the top 100 cryptocurrency gainers for the past week, you can see Ape leading the pack up 43.3%. We have Kava up 22.5%, KNC up 24.3%, and CRV up 22.8%. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 27 out of 100 in fear. Yesterday was a 23 in extreme fear, last week a 27, and last month a 49 in neutral. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down our next story of the day. Former Goldman Sachs executive Raoul Pal expects the world of blockchain technology to both mature and tackle new horizons, regardless of whether there's an extended bear market. In a new interview with BitBoy Crypto, he goes on to share that over the next few years, Web3 is going to dominate the internet, and governments are likely to launch their own cryptocurrencies in the form of central bank digital currencies, better known as CBDCs. Quoting him here, people are writing off Web2 platforms like Facebook Meta. It's not going to happen. Same with Twitter. Cut forward to 5 years, they're going to have Web3 integration, all of them. Facebook, people have to understand it's a 4 billion person network. Within 5 years, we'll also have launched the central bank digital currencies, whether they're private sector ones like Circle or whether they're public ones. Maybe the European Central Bank tries to go public. Either way, that's now given everybody the on-ramp and off-ramp to go into the digital world. That is definitely coming. The sovereign wealth funds, these are the big pools of capital from wealthy nations. That's different to the central bank's reserves. This is the wealth of nations that is coming. I know because I'm speaking to them, and I know that they're doing it. We also know that all the investment banks are now building out all sorts of products in the space, the ability for people to trade options. So that's all coming too. Also on Raoul Pal's radar is the influx of venture capital investments into the crypto space. He says that bear markets are when people should focus on creating, and he predicts new products developing, as well as solving existing concerns, such as crypto wallet security. As he shares here, we know there's a whole raft of new investment management products that's happening. But the big thing that just happened was 32 billion last year went into VC. You see it written on Twitter is what you do in the bear markets is build. This is when you start building businesses. I'm building 2 businesses in the space and everybody's doing stuff. What's going to come out of the other side of this is wallets, security in ways that you can't. You know, it's so clunky right now. It's terrifying moving money from your MetaMask to your Ledger and all of that stuff. The wallet issue is going to get solved. Integrations everywhere are going to get solved. That's all coming. Now, the macro investor also thinks that the rise of social tokens is imminent, citing the recently launched ApeCoin as a successful use case. As he shares here, I think the really big one that I've talked about all the time, because I'm also involved in building a business involved in this, is social tokens. We have barely seen them yet. I talk about them and people go, I don't really know what you're talking about. Bored Ape Yacht Club, for example, Yuga Labs, among their 3 projects, had an audience of about, call it 40,000 people. Those 40,000 people owned a bunch of OG assets. Then they launched the Ape token, and it's worth 3 or 4 billion as of today. Okay, where the hell did that come from? 4 times the size of the original assets. It is because everybody wants to be involved in that community, and this is your currency to be involved. Now, the macro guru expects other areas of entertainment and culture to jump on board social tokens, both for brand awareness as well as communities can profit off of their favorite sports team or musician. As he shares here, we haven't started where this is going. Every sports team, every massive pop star, every film, movie franchise, fashion brands, it's all going this way. So the NFT craze we've got now, cut forward to 3 years' time, and we're all going to be talking, whose networks do you own a part of? Oh my God, I just discovered this pop star. They've just had this #1 hit single. April, my token's gone up 300x. That's the world we're going to go to. So there you have it. And to watch the entire interview between BitBoy Crypto and Raul Pal, the macro guru himself, check the show notes below the video in the description. And before I break down our final breaking story of the day, Elon Musk buys Twitter for $44 billion and the crypto industry reacts. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my crypto merch store live at merch.cryptonewsalerts.net. Also, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And of course, you can find me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play. And if you're listening to the pod, be sure to check out the YouTube channel at cryptonewsalerts.net for the full premium experience with video. And of course, you can follow me on crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our final story of the day. In the hours and days before Tesla CEO Elon Musk's purchase of social media giant Twitter, discussions on free speech were common among many online users, both in and out of the crypto industry. Twitter announced on Monday it'll become a privately held company following its board of directors accepting a bid from Elon Musk to purchase the firm's stock for $54.20 per share in cash, roughly worth $44 billion. And though the transaction is expected to close in 2022, it is still subject to the approval of Twitter stockholders as well as certain regulators. Now, in one of his tweets prior to the news of the purchase becoming public, Elon said, "I hope even my worst critics remain on Twitter, because that is what free speech means." Now, Twitter quoted the CEO saying free speech is the bedrock of a functioning democracy, and Twitter is digital town square. Many, however, seem to view the multi-billion-dollar purchase as potentially having the opposite result. We have Angelo Carson, president of nonprofit media watchdog Media Matters for America, expressed concerns prior to the announcement that Twitter agreeing to the sale would be a victory for disinformation and the people who peddle it. As he shares here, a sale to Elon Musk without any conditions will pollute the entire information ecosystem by opening the floodgate of hate and lies. Twitter's board needs to take this into account now before the deal is done. Well, guess what? The deal is done. We also have Jackson Palmer, co-creator of the meme-based token Dogecoin, which Elon has often pushed on the social media platform, called the acquisition a hostile takeover, antithetical to the idea of freedom. As Elon shares here, free speech is the bedrock of a functioning democracy, and Twitter is the digital town square where matters vital to the future of humanity are debated, said Mr. Musk. I also want to make Twitter better than ever by enhancing the products with new features, making the algorithms open source to increase trust, defeating the spam bots, and authenticating all humans. Twitter has tremendous potential. I will look forward to working with the company and the community of users to unlock it. And Pompliano responded, "Congratulations on pulling this off, Elon." Now here's my favorite meme, Elon walking into Twitter HQ tomorrow with his flamethrower. Now Elon also shared, "If our Twitter bid succeeds, we will defeat the spam bots or die trying," which he shared a few days ago. And then Michael Saylor recently responded, "Twitter can solve the problem of scammers and spam bots if they allow real humans to post 50,000 Satoshis worth $20 via Lightning and get verified with an orange check. Then we can limit comments/DMs to verified accounts. Bad actors forfeit their security deposit, and Twitter monetizes malice." So there you have it. Let me know if you agree or disagree with this solution from Michael Saylor. And on-chain analyst Willy Woo chimed in, "The best thing about authenticating Twitter using a Lightning Network payment is that we can filter out all the bad spam bots to only the really good ones that actually are profitable and scamming people. Bitcoin fixes mediocrity." And Jack Mahler's also shared, "I also shared this idea with Twitter, given that Twitter is already a strike partner with our API. A proof of concept would only take a day or two. Anyone could make a micro payment to Twitter over Lightning, verifying themselves, and the spam would be dead. Bitcoin fixes this." So there you have it. You have multiple solutions to solving the problems plaguing Twitter right now. And now for a quick recap of what I covered with you here in today's show. Bitcoin repeats rare weekly chart signal that resulted in 50% Bitcoin price dips. Also shared breaking news, Fidelity to reportedly allow 401k retirement savings accounts to invest into Bitcoin, as well as here's how the crypto markets will look 5 years from now, according to the macro guru, Raul Pal. And also shared breaking news of Elon Musk buying Twitter for $44 billion, as well as the reactions from the community. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode, eCoin wrote, "Aloha JV, solid show. Always looking forward to starting the week with a good fix of crypto news alerts. Cheer. Heck yeah, fam. Great seeing the market pump once again and in the green. Strap in, hold on, and embrace for the ride of your life. Hodl. And our next featured comment comes from Jenny Jones. JV, such excellent content with such enthusiasm as always. Patience is the name of the game. Buy and hodl crypto, fam. Peace. Cheers, Jenny. Greatly appreciate your continued support as always. And yes, patience is virtuous in crypto and the name of the game. For sure. And our third and final featured comment comes from TJ Mooney, who wrote, educated investors acquire Bitcoin to get away from dollars, not gain more. Invest like Michael Saylor or live with regrets forever. Exactly, fam. Follow the whales, never retail investors. Bitcoin to the moon. Let's freaking go. And to be featured on tomorrow's episode, drop me a comment right down below.